record button for this.
All right.
So, all right. Good morning, everybody. Hope you guys are good. We have a lot of data coming out this morning. We're gonna kick off. Let's go to today. So today is gonna have like a whole list of data that's gonna it's gonna be good trading all the way to like 10:30. So it's gonna be on and off and whatnot. So in 8 minutes, we're gonna have non-farm employment change. So this is the ADP numbers. It's a precursor. So this is gonna give us an insight into what the Friday numbers are gonna be. This number usually has a market moving impact. Like when it's released in the market, it has a direct impact. However, guys, do keep in mind that the coronavirus it's hitting everything, right? So you may see like less jobs being issued out in the market. Although this is for the month of February, right? It's for everything that took place 4 weeks ago. But that was the prime of the coronavirus. Although this data looks at jobs in the U.S. was not hit hard, or they weren't in like a serious pandemic mode as they were like 4 weeks ago, right? So just keep in mind that this is a lagging data point, and that during the time when this data is collected, we weren't in panic mode, right? So it could have some type of reflection there within the data when it's released. I'm not sure if this is going to have an immediate reaction in the market. Again, I did discuss this with Joshua a while back. Remember, Joshua, when I told you about how the Trump administration is changing the way the U.S. is going to release economic data to the market, right?
Yeah.
And they're starting off in March, right? So it's now March. So the ordinary way in which the market data is released to the market during a lockup and enclosed environment, it's over. The new method now is, I believe they're just going to release it on a website, and then the market is just going to hit the server to refresh the website to get the data, pull it out, and that's how high frequency is going to trade. So do lean on a side of caution when trading data this month. It's the first time that we're going to be encountering this, the first time in like 40 years. This format has not changed, right? So be aware of that. I'm going to lean with an extra bit of caution in trading data this month, simply because of that. I haven't seen data, being released in this format ever, so I don't know how to approach it. So just lean there with a bit of caution. So with that being said, ADP, we're gonna watch out for this one to see if there's any, if there's any trades we can make on this. We're gonna look at the markets in a second. After that, you have ISM manufacturing. Right, so, this is the ISM non-manufacturing. So this is the non-manufacturing PMI. I believe the manufacturing PMI came out yesterday, if I'm not mistaken. Yesterday, maybe Monday. Hold on. Sweet. Come out on Monday. Yeah, so ISM came out on Monday here. So the ISM numbers came out on Monday, almost in contractionary territory. Again, the global manufacturing, same story, right? All global PMIs are getting hit really hard because of the supply chain effect, the shutdown in factories, and pretty much just nothing moving around because of that, right? So you can expect further downside risk. The non-manufacturing numbers coming out at 10 is a service sector, right? So it looks at every job in the service sector. So this could be things such as like Amazon workers to your bank employees, etc. I don't think, again, this is going to be hit now. Next month, watch out for these numbers to be hit based upon the fact that most people are, telling most employers are telling their employees to stay home and work from home. So you may have a slowdown in the ISM non-manufacturing number in next month, but again, this month may not be the case. At the same time that's being released, we're going to have the Bank of Canada's interest rate decision. So interest rate has been an extremely exciting event this week. On Monday, we had a surprise rate cut from the Reserve Bank of Australia, where they cut interest rates by 25 basis points. Again, to coronavirus. Everything's just coronavirus story, right? Like, not even 24 hours after that, right? Like 12 hours after that, the G7 ministers came out. They met. They're like, yeah, we're going to do everything we can to stabilize the economy. That helped to boost market sentiment a little bit. And then like half an hour later, the Federal Reserve came out guns blazing, right? They shocked the markets by cutting interest rates by 50 basis points. The first time they did a move like this since the last financial crisis. They surprise cut the markets. Usually when they cut the markets, they only do by 25 and then they wait 3 months and then they do another 25. This was 50 out of nowhere. So you're starting to begin to see the seriousness of this, right? So the RBA cut, Fed cut, Bank of Canada highly expected to cut. We're talking about 25 to possibly 50% basis point cut in CAD later today. So I'm going to talk more about this with you guys later, like around like 9:30-ish when we try to strategize for this. So I won't focus on that for now. We do have oil data being released at 10:30. Even the oil market is being hit hard. You know, OPEC producers are talking about scaling back their production in order to help oil prices from dropping even further, right? So we're starting to see a lot of things like that being played out in the market. But today should be one of those days where volatility is going to be high and it's going to make for pretty good day trading for that. Now, with that being said, if you look at the markets, right? Again, I would say the first market you guys should look at in this environment is the stock market. So if you take a look at the stock market here, we can see that the S&P 500 yesterday, we kind of bounced, right? So we had like two little bounces. So the first bounce here is this bounce. This was the massive sell-off in the bottom. And then the moment the central banks came out and said that they're going to be coordinating the effort, the markets bounced, right? And then yesterday, after the Fed cut interest rate by 50 basis points, we dropped a little bit because, again, right now, the question for the market and the Fed move is 50 enough? I don't know if 50 is enough. If the market continues to fall, obviously 50 is not enough. But if the market bounces from here, then right now, it seems like 50 is enough. So I really don't know how to interpret that other than just looking at the market and looking at where the S&P 500 is trading and using that to help me trade. So right now, the market is kind of hanging out right here. This range right here is going to be the key for me. This high range and this low range right here, that's going to be the key for trading today in the S&P 500. Watching other markets, like other risk markets, we can see here bond pulled back a little bit, gold pulled back a little bit, but it does seem like there could be a second leg. Again, guys, it's really hard to decipher market sentiment and which direction you should be trading, risk on or risk off, until we get more information. So it's all going to be very price action oriented as information comes out. So the first piece of information is coming out now. I really don't know what's a good trade setup right now. Joshua, what are you looking at for a trade setup?
I was looking at the USD.
USD, which one?
CAD.
USD CAD. Yeah, I mean USD CAD. We can look at USD CAD for one to trade. I mean this is going to be a hyper volatile one because we have the Bank of Canada coming out in about an hour and 45 minutes, right? I don't think this one is going to be volatile because of that factor. I think everybody's just going to be sitting out on this one until after that.
It's still on a strong level, like it's still there, kind of holding just above that resistant level, right?
Yeah, exactly.
So
all right, so okay, so this data is going to get released in any second. The expectation is 170, right?
Yeah. So USD, I could look at that too. I was looking at that.
Hold on.
And that's still in a strong Fibonacci point too.
Yeah. Okay. So look, we got 170. Okay, 183.
Okay.
183. It's slightly a little bit better than expectation, which is that's a good sign, right? I think right now we want to see positive data in the economy. Like you don't want to see the coronavirus hitting and then it's hitting during a time when the economy is soft and that could lead to a lot of recessionary fears. Okay.
Which one are you looking at now?
Okay, so I'm watching the correlation, the market correlation in the S&P 500, gold, dollar, yen, and 10-year U.S. Treasury note.
Okay. US JPY hasn't even really moved.
Yeah, nothing's really moved right now, right?
Yeah.
Nothing is really moving right now. So that's why you got, like I said, you got to watch the stock market and watch where the stock market is going. I think right now you could probably catch a quick scalp on the dollar yen to the upside.
Yeah.
Yeah, like a quick scalp on the dollar yen to the upside, right there.
February 27th, dollar 1.18 trillion. February 26th, dollar.
Anyone is in a trade yet or no?
Anna, are you in a trade yet?
No, not yet.
No. Okay, yeah.
You're holding out too?
I haven't decided yet. But if I do anything, it's gonna be a long stock market or long dollar yen position. Right now, I'm probably leaning towards a scalp in the dollar yen just for the small move right here.
Export expectations quite lofty for phase one trade deal, especially given discrepancy between what U.S. is a major exporter and what Chinese state-owned enterprises actually purchase from American companies. Coronavirus latest. Facebook to crack down on misinformation.
Okay.
Companies
Yeah.
wish to restart operations in China, but quarantines and other government restrictions have made it hard.
Let's take a little limit order here.
Reduce salaries, layoffs, and other struggles. Trend spike to 2.7, highest reading since drawdown began, reflecting more panic selling through pronounced downside volumes.
You going out long?
Yeah, just taking a little limit order right here.
Historically saw sustained rise after emergency
But I want to do like a buy limit like right here.
Fed's first G7 central bank to cut rates this year.
I went and I just did a 5,000, you know?
Yeah. No, you can do it small. I mean, like, I'm still playing around because, like, I just got Danny just gave me his Oanda Live account. There's not much money in it, and so right now I'm playing around with the margin too, trying to figure out what's going on. Like you can see here, like on this positioning here I put in, like it's like a point. I don't even know if that's correct value. Like that's not even enough. Like 100 is not enough. You do like 5,000, eh?
Yeah, like 5,000.
Yeah, yeah, I gotta do at least like 1,000. Yeah, so I'm still playing around with this. Like, I noticed that a lot of you guys are trading on, like you're trading on TradingView, and I don't understand the margin on this properly yet, so I gotta play around with this a little bit.
Yeah,
I know on the other platforms the margins are slightly different, right? So I'm playing around with this, and also I also have this. Like he also gave me this too. Like I have the CQG account. Like I can switch to the CQG account.
Yeah.
And then I get like real market data from the order book, right?
Oh.
Right. So like for example, like here I can get like the order book from the ES. You know, because like yeah, he gave me this account here, so yeah. See, like here I got the order book from the ES. Yeah. So, anyways, I'm gonna play around on the Oanda account.
Which you use your device for dollar yen?
For dollar, what side of the market?
Yeah, for dollar yen.
For dollar yen, we want to be long. We want to be long dollar yen.
But wait a little bit until drop or just go.
Okay, so hold on. Yeah, we're gonna wait till like right about here. How about here? So hold on. Let's see. Let me put in the proper amount. I'm gonna try 1,000, see what 1,000 does, and then buy limit. Boom. Huh? No. Wait. I thought I had 1,000.
And the prior revised higher, I'm still waiting for the actual number here.
Buy.
Greece uses tear gas on migrants at border as road with Turkey worsens.
Okay, here.
Just recapping on that data there. The employment change report by the ADP.
Let's try this.
I don't know what it is, but
Okay, there we go. Okay, that's better. Yeah, sorry, Joshua, you say something?
we don't know what it is, but like S&P 500, like their margin is a lot different to me, kind of.
Yeah. On Oanda, like you have to play around with the product, right? There's several products that you can look at, but you shouldn't be trading. For example, like the bonds on the Oanda, you should not be trading those products for the following reasons. Their spread is extremely high, and the volatility in bonds does not make it worthwhile to trade it, because bonds will only move like a very short amount, a small amount, whereas certain products or other products will move a larger amount. And when you're trading with leverage that's offered by Oanda, if you're trading a product with extremely low leverage and a high cost, it's not worthwhile to trade. So certain products, stay away from them. Like, for example, I never trade bonds. Like, I've traded it once, and only once I've put up trade on like a 10-year treasury note on the Oanda, and I never did it again after that. I've only stuck to trading forex on Oanda. I've traded gold oil on Oanda because those are volatile products, they move, and the S&P 500, but the margin and cost in the S&P 500 is slightly different. So you just gotta like kind of recognize that.
Yeah.
Anyways, let me see here what we can get. We'll likely get filled here. I think we're yeah. We'll see how it goes.
Dynatrace started and outperformed with $38 stock price target at Raymond James.